Dan Weiskopf joins us today. He is the portfolio manager of Tidal Financial, and we'll be talking about his outlook for Bitcoin and the activity in the Bitcoin ETF space that have been driving the price and will possibly continue to drive the price. He's going to break that down for us. Dan has an outlook for $100,000 on Bitcoin. We'll see why. Today's episode is brought to you by iTrust Capital, an IRA that offers 35 crypto assets and the lowest trading fees in the crypto IRA space at 1%. If you'd like to learn more, just click on the link down below, itrust.capital/David, and get started. And if you fund your account using my referral link, you'll get $100 in signing bonuses. Dan, welcome to the show. Good to see you.
David, thanks for having me. This is going to be a fun conversation. Look forward to your questions.
Absolutely. I've spoken to your colleague, Michael Gayed, several times, so I'm excited to get your take. By the way, you're known on Twitter as the ETF professor. That's your handle. What's the story behind that?
Well, listen, I've been around the ETF industry for about 25 years, and I love educating people. When you look at the world, some people are early adopters. I'm an early adopter. I was early on ETFs. I was, frankly, early on hedge funds as well. So ETF professor seemed like a right handle.
Okay, well, we'll talk about one of your ETFs, BLOK, a very interesting product. And we'll talk about the news of some of these companies that you hold. Let's start by talking about your Bitcoin outlook. You told me offline 100K is your forecast or your outlook. Okay, tell us why.
Yeah, I mean, listen, at the end of the day, I think Bitcoin's trying to find a level here, whether it'll be 58 or 55 or maybe even 58, it's really unclear. But round numbers, in my experience, of Wall Street work. And then, maybe Germany's done today on selling. And then we start tracking back up, right? And we'll go to new highs because I think in part because the ETF flows. ETF flows have been very strong of late.
Yeah.
And then I believe you're going to have more platforms approving the spot Bitcoin ETFs in the fourth quarter, and we'll rally to 100K. David, everybody, a lot of folks talk about wild numbers, 150, 200,000, a million. You got to get past 100K before you can talk about 200, 300K.
Well, let's talk about the downside as well. Okay, so I remember back when I was covering Bitcoin in 2022, mid-2021, when there was the most hype, I asked people, will we get another 2017 style correction when it went from, I think, 17,000 at the time down to like 2,000 or 3,000, okay? And the overwhelming answer I got is no, because there's a lot more institutional interest, so it won't go down as much. They were all wrong, by the way, because it corrected at least 50, 60%. I'm going to ask you the same thing now. What's different this time? Because people have been telling me the same story. Institutional demand is up. Well, they said the same thing in 2021. They were all wrong. Is it different this time?
No. In the context of what you're asking, will Bitcoin over time correct in big magnitudes, 50, 60, 70%? Possibly. Absolutely possibly. I was there too, to your point. I've been involved in Bitcoin and the crypto market since 2017.
Yeah.
But to your point, I think institutional demand is coming in, and I think it's coming in sized right? If you're allocating at levels of 1%, 2%, it gets cut in half. If you still believe in it, you can add to it. If you're allocating 10, 20, 25%, you panic. And I think that's something that is different.
When you say institutional demand, what are we talking about here? Who is coming into the space that perhaps wasn't in the space in 2021?
Well, I think the family offices are playing around in it. I think certain endowments are also involved. I've even seen some pensions involved as well. That's who's getting in. Most importantly, I think the financial advisor is also very interested in Bitcoin, and possibly even Ethereum.
What do you think changed their minds or persuaded them to get in this cycle?
Yeah, well, I'd say two things. A lot of people say if you're not long Bitcoin, you're short. And when they say that, they're saying it because it's, quote, been the best asset class the last 5, 6, 10 years, right? And that'll affect your return, and clients will demand it. Okay. That may or may not be true. I think more to the point than anything else, if you're not long the transformation that's coming as a result of Bitcoin and digital assets, well, I don't care if you're a CEO, I don't care if you're a money manager, you may be in trouble because it's going to change how industries are operated in much the same way the internet changed things.
Let's address some recent Bitcoin news. So, following a dip in early July, we've seen a bit of a resurgence of Bitcoin ETF inflows. Again, spot ETFs like Bitwise and ARK attracting more activity. This is looking like a renewal in appetite. However, at the same time, as you know, the Bitcoin price has been dipping. Right, it's now at $58,000 as we speak on the 12th of July. Can you comment on this dynamic?
Yeah, one of the great things that ETFs provide is price discovery, right? And what you're describing is not new to the ETF market. That's the way ETFs operate. So if $1 billion comes in over a week's period of time, like I think it's happened, what's happening? It's the marketplace, institutions, investors testing out the market. And probably, again, I believe that they're doing it in such a way where they're not overexposed. The leverage in the Bitcoin market, I'm told, is not huge these days as compared to your period of time that you were speaking about in 2021.
Can we then make the argument that Bitcoin inflows is not a leading indicator of price or even a coincident indicator of price movement?
No, I think on the contrary, I think it can be both a leading indicator as well as an indicator of a basing, right? Which I hope is what we're looking at right now.
So generally speaking, then, just evaluating Bitcoin ETF activity, are we seeing more interest in selling or buying from whoever's holding these ETFs?
Well, it's pretty clear that there's been more interest in buying than selling because you could see the net plus, right? And a lot of the outflows have come from GBTC. Let's be realistic about it.
Yeah, but the point is that the price continues to fall. So why is there this dichotomy here between price falling and more interest in buying?
Yeah, so you're saying the price continues to fall, and I would say price is still up considerably since the products were launched, right? Still up considerably from beginning of the year and when it bottomed. I'd also say, a lot of people look at Bitcoin and crypto and don't appreciate that, with higher price comes more supply. We talk about 100K. I would expect more supply to come on the market as we move up, right? And that's not really new news, but it's greater demand that's offsetting that supply.
Okay. I want to just draw your attention to some critics of Bitcoin who have been saying that this trend is downward. Peter Schiff, well known in the space, doesn't like Bitcoin. He says, he tweeted this not too long ago, last week, based on the trading pattern and ETF inflows, it looks like the smart money is selling Bitcoin in the spot market, while the quote unquote dumb money is buying it through ETFs. Congratulations to the Bitcoin whales for pulling this off. They set up Bitcoin ETF investors to be the bank holders. Can you just comment on that? True or false?
Has he ever said anything positive about Bitcoin?
No.
So, listen, it's entertainment, and that's fine. Smart money, according to Peter Schiff, is those who are not involved in Bitcoin. So mostly, I just wouldn't agree with him.
Would there be a level, though, at which if Bitcoin reaches this level on the floor, that you're going to start seeing a lot of people selling their Bitcoin ETFs? Because keep in mind, the Bitcoin ETF was launched earlier this year when the Bitcoin price was already above, I think, $40,000.
Yeah.
Anything before that and anything below that, any Bitcoin ETF holder would be at a loss, right?
Yeah. Well, in the ETF specifically, I think probably if we start testing 50K, people are going to get nervous, right? But the funniest thing about this, and I think Michael Saylor says as well, so people can test it out. It can be a 1% allocation, but if they don't do the work, they're not going to get confident. If people do the work and they invest in NVIDIA, as an example, they're going to be more inclined to be long-term investors. If people are trading Bitcoin, they're probably not going to be long-lasting.
Have you done any research on who is actually buying the most Bitcoin ETFs? Is it the institutions? Is it the JP Morgans of the world? JP Morgan has actually recently added to their Bitcoin ETF holdings. Is it the retail investors, the quote unquote dumb money per some people's tweets?
As somebody who's involved in ETFs, just remember that sometimes market makers are booked as if they're holding Bitcoin, but they're not really holding Bitcoin. Um, it's a fluid situation for sure. I don't think it's always so clear who owns an ETF. It's just the structure of the ETF itself. But when you look at the flows of late, right, you're seeing positive flows and they've been tested. We haven't really seen huge outflows from from the ETFs, except for GPTC. And if somebody's bought the ETFs, you mentioned some of them, like iShares or ARK or it doesn't really matter. They just started getting in. It's a new investment for them.
Long term, are there developments for Bitcoin that are positive for the price for you, other than ETF inflows?
Yeah, well, I think anytime transactional volumes pick up, that's huge. I think any technological advancements are huge. Just understand, again, where I'm coming from is on the whole concept of tokenization, right? So what gets put on blockchain validates the utility value of not just Bitcoin, but crypto in general.
ETH ETF, it's been speculated that we're going to see launches very soon. It's already been, we've passed the hurdle of the SEC denying applications. So now it's just a matter of time, they say, before we're going to see this online. Interestingly, the news has not really, I don't know if it's a factor into the price, but the ETH price has not looked good. If you look at the charts, it's just been going down all year. So what's going on here?
Yeah, I don't hear a great deal of optimism around the Ethereum spot like I did the Bitcoin spot. I think you're going to similarly see some outflows as a result of the conversion of one of the ETFs, ETHE, and the question is going to be: is it 2 billion or 4 billion of outflows from that offset the inflows in the other ones? And we don't know, right? In the case of the Bitcoin spot, there was a lot of time also to build out the marketing and sales efforts. There hasn't been that much time really on the ETH spot. There's also, let's be honest, a lot of folks say it's an inferior product versus just holding ETH in a
Why
wallet.
is that? I haven't heard that narrative before.
Well, because you can't stake it.
Okay.
Right. So you're not getting the 3%. I'm not sure I'm in that camp, quite honestly, because if you're investing in a new technology, a new commodity, or whatever you want to call it, right, you're not really looking for just 3% yield. You're looking out for how it's going to change the world.
One of the other differences between Bitcoin and ETH, besides proof of work versus proof of stake, is that ETH is a deflationary asset versus Bitcoin, which is still inflationary. There's still new Bitcoins being minted, where there's ETH actually being burned, net burned. And so, if you consider that the ETH ETF would add to perhaps even more demand, one could argue that's hugely beneficial for the price. Again, I'm not seeing that being reflected in the market. What's your take?
Stay tuned. Really, it's hard to we're over a longer period of time, meaning into 2025. I think it'll balance itself out, and I think that ETH also has constraints on its supply, just not the same cap that Bitcoin does.
Theoretically, it doesn't have a cap, but like I said, it's just there's so much being burned now, it's deflationary, right? That's an interesting topic altogether. I remember when the ETH merge happened a couple of years ago, people were saying, well, it's going to become deflationary. It has, and the price is going to skyrocket to, new highs immediately after the merge. It has not. Is there a demand supply story for ETH, or is it just following Bitcoin?
No, I think it's parallels a bit like gold and silver, right? ETH has a different utility value than Bitcoin. Right. So what gets put on ETH will create greater demand. And we'll see how it all works out.
Any other, I guess, ETF products in the crypto space that you're eyeing or potentially excited about? We'll talk about BLOK as well. Besides that, yeah.
Well, I mean, I think that there's, filings on Solana, which would be interesting. um, you know, we're and as you would imagine, we're more focused on the companies than the crypto side of things. And we have about a 10% exposure to direct in the way of spot or including MicroStrategy, and that's how we play.
Well, some of your companies actually are miners as well. I see Marathon Digital is one of the holdings of BLOK. I'll get into BLOK more in just a bit, but let's talk about the miners leading up to that discussion. Bitcoin miners are set for a coiled spring rally. I'm reading this headline from CoinDesk. Miners face uncertain times as the halving changes Bitcoin's economics. Which groups are best positioned for the future? Dan Weiskopf, Tidal Financial Group, gives a rundown. What was your analysis in this article?
Yeah, I mean, we are big holders of the miners. In fact, right now we're about $165 million invested in the miners. So how we invest in them, I think, frankly, matters in the marketplace as well as, our portfolio. And what I was anticipating in April, and it proved out to be the right case, that AI, because these are data centers at the end of the day. I mean, unfortunately, in the same way that there was a label called smart beta in the way of ETFs, somehow we got to miners being Bitcoin miners, right? It doesn't make sense, but they're data centers. And what I was thinking back then and what I'm thinking about in the future is that now miners are going to be able to fulfill a shortage in the data center area, right? And there are data centers that are needed to meet the demand of AI. People say, oh, I can do my job easier using AI. Well, you need the data centers to fulfill that. And Core is now the largest Bitcoin miner that does both, as an example.
There's been speculation that the cost of mining will go up significantly post halving. Well, mathematically speaking, it will,
It does.
but the level is what's debatable. So, here is it was a trending tweet from back in April, according to data from
Sure.
Crypto Quant CEO Ki Jong Ju. The cost of mining is going to go up from 40,000 to 80,000 post halving in mid-April. Okay, that hasn't happened. Okay, why do you think it's going to happen at some point in the near future? I'm not talking about the next halving cycle. I'm talking about $80,000, the cost of Bitcoin mining now.
Well, what would happen if that were to occur, right? Miners come offline because they can't indefinitely lose money. So that's the way the algorithm works for the miners. When the difficulty rate goes higher, the miners, certain ones that are unprofitable, come offline. So when you have equipment that is operating efficiently, or operators who know how to operate with lower cost energy,
That's it.
They stay online, right?
Yeah, I was going to ask you, isn't it largely dependent on their fixed costs or energy costs? If they're able to scale, and still get the same amount of rewards, block rewards, by just more
Yeah.
computational power without burning up extra energy, they're going to keep the cost down.
Yeah, I mean, so as an example to your point, Core just signed a massive deal with BLOK, aka Square, right? Believe it or not, Square is now also in the mining business, right? And we just added to that as a position further. And the technology on how you mine really does matter, because if you don't control your energy costs, you might be able to have some hedging, et cetera, in the energy, but it's a key variable. The equipment cost also is a key variable. You have no idea what the Bitcoin price will be. So when your revenues get cut in half, you've got to figure out how to optimize your business model.
Okay, let's talk about the BLOK ETF. I'm curious as to why you pick some of the companies in the holdings. So I'm just looking at the fact sheet, the top holdings: Galaxy, Coinbase, MicroStrategy, Beyond Inc., Robinhood, and then CleanSpark, PayPal, Marathon Digital I mentioned, and I think you added a few others recently, right? Let's just start with the top holdings first. What are these companies doing in the space that attract their I guess, framework or strategy to you?
Yeah, so in the case of Core, I hate to keep on harping on that one name, but it is our biggest name. For better or for worse, we got in early 2 years ago, for worse, through a convertible bond, right? And when the company went bankrupt, we were senior to everybody else. So I was part of the committee to restructure the company. When the company came out of bankruptcy in January, we were long both the bonds as well as stock. And so that's how we got to that position, and that's why it's so large. We tend to reduce the positions as they get 5.5%, 6%, because we don't want one position just driving the performance. So we're out of that convertible. We're just long the stock at this point. Galaxy Digital basically is a merchant bank, asset manager, venture capital, and platform for those who want to trade. Now, coincidentally, Galaxy also just partnered with State Street to launch a competing product against BLOK. And you know what? I love the competition. There's a lot of passive funds that have tried to compete against us, and it's very difficult. This is an industry that's evolving and very new, and you need active management in that area. Coinbase, I think probably most people know because it's been around for so long. MicroStrategy has some various nuances. Basically, it's a Bitcoin holder with 226,000 Bitcoin, and that's what drives the price, and that's what gives us the direct exposure to Bitcoin.
I'm curious as to what MicroStrategy did that gave them success. For most of 2023 and early 2024, their prices more or less just tracked the Bitcoin price. Their share prices tracked the Bitcoin price with a little bit of leverage, but then it really shot through the roof in March of this year, late February, March, early March. What happened there? Do you recall?
So MicroStrategy. The interesting, we've been involved since Michael converted his treasury. Michael Saylor, I'm speaking about.
Yes.
Converted his treasury from U.S. treasuries, et cetera, to buying Bitcoin. And what ends up happening is it's a leveraged play on Bitcoin because he's borrowing, and he's borrowing money at ridiculous levels. I mean, listen, I commend those institutions for investing with him that way, but he's borrowing money at like 1% and a 40% premium over his stock that's already trading at a premium. So for us, it's a leveraged way to invest in Bitcoin, and the underlying business might be worth $1 billion, but the stock market value for it is $24 billion.
They recently, just this week, announced a 10-for-1 stock split. The company said the shares will be split into Class A common shares and Class B common shares, quote unquote, to make MicroStrategy's stock price more accessible, or stock more accessible to investors and employees. Is there a broader strategy at play here?
With him splitting the stock, the broader, he's just trying to increase accessibility. And the more trading that occurs in the way of his stock, the more inclined I think a lot of people are to invest. We'll see, if the speculation ends up being true that in fact the stock gets added to the S&P 500.
Yeah, it also opens up to more potentially shorting pressure, though, right? So that's kind of a double-edged sword.
There are shorts on it, and you know what? More power to them. It's the problem with shorting MicroStrategy is, and I've been on the short side in my hedge fund days. It's too obvious. What are they trying to do? They're shorting the premium, right? But actually, it turns out that every time the stock gets to trade at a more premium, right, it's a better opportunity for him to buy more Bitcoin.
Generally speaking, how do you evaluate miners as an investment long term? I've heard the bearish argument that it's just a business facing an existential crisis. First of all, you're mining a product that at one point will no longer be mineable. Second, your fixed costs will continuously go up with every halving cycle, and your margin is really dependent. You're at the mercy of the Bitcoin price, which you can't control, and you're in a higher rising cost environment for your business. It doesn't look good long term. How do you respond to that?
All those arguments are true. It's a really, really hard business. So when some of the miners tilted towards AI, which is a far better business at current prices, it made a whole lot of sense. Think about it. If you've got and let me explain something. The business between AI in Bitcoin mining is similar but very different. In using the AI side of things, you need less power, right? And that's a good thing. But you can get upfront dollars from firms like CoreWeave who need that infrastructure. So it's basically a contract to get paid to manage a data center. It's way different than what you're describing as a Bitcoin miner, where you don't have a lot of control over a lot of things that, frankly, aren't controllable. So my response would be the following. Those who tilt towards the AI side have seen in the last 2 months a major increase in their multiples. And what has occurred with that is the ATMs have been turned on, right? So the ATMs are at the market offerings, so they can raise more capital, okay, at a higher multiple than the pure play Bitcoin miners. So what you've seen is a divergence between those who tilted towards AI, rallying since April, and those who stayed focused just on Bitcoin mining, just kind of staying stable and not rallying as much. But they're both doing the ATMs.
Do you foresee some of the Bitcoin miners to perhaps pivot into mining other things outside of Bitcoin in the crypto space?
Well, Marathon has done exactly that with what they claim is 95% gross margin.
So is that going to become an industry trend? Yeah.
If one miner can do it, others can as well. So possibly, of course.
Okay. Great. Well, I appreciate your thoughts, Dan. That was a very good discussion. Where can we learn more about your work and Tidal?
Sure. Well, there are two places you can go. One is to the Amplify website. And again, just for everybody to know, we disclose our holdings every day, right? And I, of course, am also available as the ETF professor. You can also see some interviews that I've done with folks like Michael Saylor a couple of years back on the ETF Think Tank YouTube channel.
Excellent. We'll put the links in the description down below, so make sure to follow Dan there. Thank you very much, Mr. ETF Professor. We'll speak again next time.
Thanks, David. It was a lot of fun.
Yeah, thank you for watching. Don't forget to like and subscribe.